I took $500 to over $10,000 in a options portfolio trading my pre-market range breakout strategy. And in this video, I'm going to teach you step by step on how you can take the same trades that I did. So here's what Google says a breakout is. So here you can see that the stock goes up and then rejects this level, goes up, rejects this level, then it breaks out of this level. Now this level is support, and you probably see this all the time on the charts where the stock just can't get outside of a range just like this. Now what happens when we get out of a huge range like this? A huge explosive move. So here's an example of my pre-market range breakout. So we have the range inside of pre-market. As you guys can see here, we can't pass this level, and we even had some manipulation here too. And we see a breakout with this 5-minute candle here, and as you guys can see here, this candle has a huge body and a little wick, so most likely we're going to keep on going up. So after that 5-minute candle closed, what happens? The stock just went to the moon just like that. So here's how you can enter in on this trade. You enter into call options after this 5-minute candle closes, and you can keep your stop loss tight because it should keep on going up. If it doesn't keep on going up, that means this momentum candle was invalid. So then you can as it goes up, you can scale out. So 30% gain, 50% gain, 70% gain, you're gonna sell most of your contracts at every single price target. All right, let's go ahead and look at another example here. As you can see here, the stock was just ranging at this certain level inside of pre-market. And then as you can see, we wait until a momentum candle closes above this level. So you could either enter here, but I would wait until a bigger candle, just like this. Then I would enter into a long position, and since this candle is a decent size, we can go ahead and just put our stop loss just below this candle, and for the rest of the day you're selling most leaving runners, selling most leaving runners. Alright, so this is how easy this strategy is, guys. We break out of a pre-market range. If you guys want to add pre-market onto your TradingView account, all you gotta do is just go down to the settings down here, go to session, add extended trading hours. So what do I mean by when scaling out? Okay, so we enter in this position, we're getting in out of the money call options or at the money call options. You guys can go even more in the money if you want to, it's up to you. But as you can see here, on the way up, probably right here, these call options are up 30%, 50%. Up here, they're up like 100%. So at 30%, I'm gonna sell half. At 50%, I'm gonna sell another half. 70% sell another half, 100% sell another half. Okay, then I'm probably left with just like 4 contracts. Okay, and maybe that's like 25% of my profit. I'm just gonna leave those as runners. Okay, or I could have those runners and have it like a trailing stop loss. So when we go down to here, I'll get stopped out, but I personally just hold to the rest of the day, see what happens. Now it doesn't always have to be in pre-market. As you can see here, we range at this level after market opens, and then what happens? We break out of the level. You can go ahead and enter into a long position just with your stop loss at that range. And look at this risk to reward, guys. It's not bad, but I wait for the first 5-minute candle to close after pre-market, and I have a 80% win rate doing that for trades that go 30%. So let's go ahead and look at example to the downside. So as you guys can see here, we're looking at Tesla. Let's look inside of the pre-market. As you can see, we're ranging at this level. We bounced off here. We couldn't pass it, and then we couldn't get down below here. What I would like to do is look for the stock to close a momentum candle below this level. As you can see, we did that right here, and we can enter in a short position with just our stop loss below that candle or just right above that support line. This would be a support line, so if we break above that support line, we can go ahead and have our mental stop loss there and get out. But as you guys can see, if you were to hold these contracts the rest of the day, these put contracts, they would get you almost these puts probably went like 200%, guys. If you guys got like at the money puts, strike price of, well, let's say strike price of 455, it went all the way down to 435. So now you are deeply on the money, even if it's 0 day till expiration. If it's 0 day to expiration, probably 1,000% on these guys. And here's another example. Not always it's just gonna go crazy up right away. As you guys can see here, we reject off of this level inside of pre-market, and after market we were holding this level too. We couldn't pass it here, so even better. And now we see a momentum candle just break right through it, and we can enter in a long position with our stop loss just below that level. And as you guys can see here, a nice almost 3-to-1 risk to reward trade. On the way out, you're going to scale out. On the way up, pretty good. So how do I find stocks that break out just like this? So here's what I do. I find stocks that's correlated with the S&P 500. So usually when the S&P 500 is making higher highs inside of pre-market, this stock, like Tesla, for example, is usually doing the same. But some days it's different because there's different market sentiment. There's insider trading, whatever. It doesn't matter. We read the charts. Okay. I want to find this day if I'm going to buy puts, for example. I want to see the S&P 500 up 1%. And in the S&P 500, we're just going up. Okay. Now I find Tesla down 2% or something and just going down. Okay. Then I'm going to mark out the levels where the stock likes to reject and then look for my entry after the first 5-minute candle or the first momentum candle closes. Now, if we're buying calls, vice versa. We want to see the S&P 500 like consolidating or making lower lows, and then we want to find this stock. Out of all the other S&P correlated stocks, we want to find this one making higher highs. Higher highs, higher lows, and just doing better inside of the pre-market. So I would be looking to buy calls on that stock in the morning. So here's another example. We have Tesla here doing good inside of pre-market. So it's probably up 2% in pre-market. I don't know about the S&P 500 on this day, but I took this trade, and I'll tell you what, the S&P 500 was doing worse than Tesla inside of the pre-market. And as you can see here, we reject this level. We reject this certain key level about 2 times here. And then we just can't pass it the rest of the day. And as you guys can see here, we break out with a 5-minute momentum candle, and we'll go ahead and enter into a long position. And now you can just put your stop loss below here, and it's pretty good. So the really good thing about this strategy is that since we're buying at the money or out of the money call options, they're mostly comprised of volatility. So since this market open, all this volume is coming in, which is improving the premium of the contract. So imagine if we get in after this 5-minute candle closes, it's just going to start growing exponential. So probably at this peak right here of this 5-minute candle, they're probably already up 40%. So after a 5-minute candle close and a breakout, guys, it's just so much profit. And even if we retrace down to here, because of all the volume coming into the contract at market open, even as we're moving down, the premium of the contract, so imagine it's 30 cents. Even if the stock is moving down, the call option price will probably just stay at 30 cents or even grow, because of all the volume coming into the contracts and because everybody's seeing that the stock is breaking out. So volume is coming in and we can maximize our risk to reward ratio. So we'll take 100% gain up here, and then if we go down and retrace back to our psychological level for our stop loss, we exit for a 10% loss. This is how I grow my portfolio with this strategy so consistently. I do not trade the traditional opening range breakout strategy. I trade the pre-market range breakout strategy, guys. ORB is saturated in my opinion. And if you could truly master this entry along with the narrative, along with the bias, then you can definitely master the markets. And if you want to check out more, such as my swing trades, such as my classes I do that may be free, click the link in my description. There's a free Discord link. I have over 200 people right now that trade the same exact model I just showed you in this video, and feel free to ask questions in the chat and check out the free 5-step pre-market range breakout checklist that is also inside of the link in the description. And all that, guys, the Discord link, it's all going to be in my channel's description or inside of this video's description. Thanks for watching this video, guys, and I will see you in the next one.